Hey, what's going on, everybody? Welcome back to this week's edition of Money March. We are just kicking off this month as we prepare to gear up for Financial Literacy Month, which is in April. But I wanted my people to get a head start so you can get a jump on the ball. Now, last week we talked about estate planning and how important that was to making sure that when you set up everything that you need for your loved ones, that the state isn't going to intervene and make their plan become your plan de facto. So if you didn't watch that one, go back and watch it. It's available on the replay. For now, though, in this episode, we're going to be talking about life insurance and why that's important and the type of things that you can do with it. We'll dispel some myths and bring some truths to the game. This is not my field. This is not my lane. So I brought in another heavy hitter. So I brought in my friend Ramona Smart with the Smart Insurance Agency. She's going to just break it down and give you guys the cheat code about how you can use this to create generational wealth, as well as make sure that the people that you leave behind when you transition, unfortunately, nobody likes to talk about that, but it's just a part of life. We just want to make sure that we're leaving something behind for the generations coming after us that doesn't put them in a financial bind. So, Mona, can you just introduce yourself to the people, tell them what you do and why you do what you do?
Hello, everybody. So, my name is Ramona Smart, and I have an insurance agency that I've had for 13 years. And my office is here in Woodland Hills. I have to tell you that really the one of the big factors of me starting the agency was I in working in insurance, I had found all of these things that my parents own their own business and just all these different ways of how insurance is used and how it protects you. I felt like this was not widely known and how someone could be financially devastated by not having the proper insurance. And really, that was heavy on my heart. And working in the Black community has always been something I've been passionate about. And so when I started my agency, I was on Crenshaw on 48th, and my goal was to really bring the education of financial security through insurance to the community. And that has been something that has been consistent throughout my 13 years.
Yep, I love it. I love it. We're all about making sure that our people have the information. Now,
Yes,
just having the information is not going to do you much good if you don't apply it. So
got to
make
do
sure when
something
you
about it.
take these nuggets, you go out there and
Yes,
actually use them. So I appreciate that,
yes.
Mona. Um, Real quick, first question I just want to throw at you is how how can we as a people, as Black people of color in general, Black people more specifically, how can we use life insurance to its optimal capacity? First off, kind of break down the different, because I know everybody has these questions like, okay, what type of life insurance did I get? I hear you guys talking, but I don't know what to do. I don't know what to get. There's so many options. It's just all so confusing. So bring it down so that the people can just understand it on a very granular level what options are out there so that they can make informed decisions and then how to use those options to really build generational wealth.
Well, that was a lot. So let's dial it back just a little bit and let's start with why. Why would one want life insurance? So let's start with just replacement income. One of the scariest things that occurred to me as a wife and a mom was that 80% of men that die will be married when they die. 80%. So what that leads me to believe is that there is someone that they are married to that will no longer have that financial stability. Many of us are in two income households right now. And in that, you imagine what, regardless of if the husband or the wife passes away, if you are dependent on two incomes, what would your life look like if it went down to one? And what are the changes you'll have to make in your house, in your household, where you live in order to to survive having one person pass away, regardless of if it's the husband or the wife. So that leads me to home security, house security. You two people are paying rent, two people are paying the mortgage, maybe two people qualified in order to get the mortgage in the first place, and one person passes away. God forbid that one person passes away, and then you have to requalify for the mortgage if you want to refinance or do anything. You can't, because now you're down to one income. So that's a really big deal in having to replace that, and having the security of where you live is so essential. Even if you're renting and it takes two incomes to pay the rent, it's still a big deal, and to have to consider that while you're grieving. Third would be the financial security of debts. So you guys are sharing debts. One person has a loan on a car, their credit cards. The surviving spouse is going to have to figure out what to do, how to do it on their own income. What a lot of people don't know is that if you co-signed on a student loan, God forbid your child passes away and you've co-signed on that student loan, you are still responsible for that child's debt for that student loan. And if you take out a loan and one person is both people are signers on that loan, you're still responsible for that. The person that survives is still responsible, and they have to figure out how to get that paid. And then last, we've all seen the person on the side of the road asking for, or the GoFundMe, where they're asking for money to help bury somebody. What people don't understand is that in a typical American household, the average amount of savings is $8,863 in the account. And in one's illness, not everybody just passes away suddenly. They may go through some sort of sickness. And in that sickness, the people are taking off of work, they're spending their savings in order to actually take care of, pay for medicine, all of that. And so when it comes down to paying for the funeral, you may have depleted all of your savings at that point, and you have no money to then bury that person. God forbid that they actually passed away. So those are the big four whys as to why you would want life insurance, and that's just where you want to start. Then we go into the in it's going to happen. There's not one of us that are going to live forever. So we know that the life expectancy of men is 76 years, and the life expectancy of women is 81 years. What's also frightening is that someone who is widowed, they could be single and widowed for up to 15 years, which means that they are surviving on one income. And women tend to be widowed at about 59 years old. So imagine being 59, still very young, and you are widowed at that point. These are all, and if God forbid you have children that you're trying to raise by yourself at that point as well. So those are all things to think about. We have lost Dietric, I think. Are you there? I don't see him anymore. So I don't know if we are still on, because I can still keep talking. If Dietric can let me know.